Hello and welcome to the Weekend Investing Daily Byte of 24th of June. And the markets did the impossible, gap down and then closed in the green. In fact, the market made a move today which gives me a lot of confidence for the path going forward, and I'll tell you why. The major story of the day is this front running scare in the markets. Should you be worried what is front running? We'll talk all about this in detail towards the second half of this video. But first, a look at the market. So, Nifty, as you can see, gapped down and took a very nice support at this previous high, which is a very, technically absolutely great point to revert from. And the market opened gap down and it closed 0.16% up. It didn't go up much, but what you can see is that over the last 9 sessions, you had very, you know, sort of a limiting market in the sense that it opened and it just didn't go anywhere, or it usually came down as you had 8 out of 9 candles being red, and just the one green candle also is like a doji. Today is that first full body green candle where the bulls have asserted themselves. They have taken the advantage of a lower gap open, and the bears had to retract once again. So this today's move is very good, and today's low will now be important going forward in the short term technical basis. Nifty Next 50 also went below this support but emerged higher. In fact, at 0.75% higher. So again, we are quite blessed with a good, strong Nifty chart right now. Mid caps, no change at all, I would say. 0.24% up and still in this zone for the last 6 days. So nothing damaged here. In terms of small caps, again, similar to mid caps, just in this very 300 to 400 point zone, exactly closing at where the previous close was. Nifty Bank Index also taking the same support. Can you see the consistency in all these charts where the market has taken the same support from the previous high and validating that high as being a support point? And for the near future, now this becomes an important support going forward. Although on net basis, Bank Nifty was flat. FIIs and DIIs. FIIs had a sell position yesterday at 1790 crores. Day previous to that, also it was a flat day for FIIs. DIIs have been buying at 1200 crores yesterday, and previous to that, it was a small sell position. So no continuous buying from FIIs is seen. It is extremely choppy. In this 1 month itself, you can see buying, selling, buying, selling, buying, selling. A few days of buying and then few days of selling. So there is no coherent trend on the FII front at least. Today's heat map, you can see mostly it is either gray or red. You had Reliance, which was down almost 1%. Banks were kind of flat. Axis Bank, Kotak Bank, both flat. And you had HDFC Bank go up 0.4%. ICICI Bank was up 1%. Mahindra and Mahindra doing very well at 2.6%. Grasim, Sun Pharma, Power Grid, Tata Consumers, these were some of the stocks that did well. And you had Coal India, Adani Ports, Cipla, Tata Steel lost some ground. In the Nifty Next 50 domain, you can see a lot more green. So it tells you that beyond Nifty, the market was in fact greener. Adani Green was up 2%, HAL, BEL, all the public sector enterprise stocks, REC, PFC, all in the green. Trent, Zomato, Naukri, Siemens. These some of these stocks have been running now for the last many sessions. Chola Finance, Siemens, and Zomato, and have been building on their ground. Geofinance, DLF, also down a bit. LIC down a bit. Vedanta, Jindal Steel, Pidilite also losing ground. Overall, a reasonably good Nifty Next 50 situation right there. Within sectoral trends, you had autos gaining 0.9%, consumption stocks 0.8. So consumption is that story that may pick up given the fact that there are now a lot of rumors stating that the budget will have some relaxation for salaried salaried up to 15 lakh category, and that may spur some consumption. Of course, these are all extremely speculative news so far. FMCG also up 0.7%. And you can see beyond that, there was really no sector which was in any performance. In fact, metals and PSU banks were soft by zero point 0.6 and 0.7%. Auto index after 4 days of fall on back of Mahindra and Mahindra largely is looking up. The trend is very strong. I would say one of the strongest trends that exists in across the sectors. FMCG uh, went up very nicely. It had a sort of a double top here and is now consolidating again at near 56,000. So this was one space where I thought that it may take out the new high, but that didn't happen on that occasion. In terms of stock spotlight, BBTC Bombay Burma has rocketed up 19% today after a long consolidation. Uh, Usually, lower volume stocks are moving extremely fast in the market. If I see the number of stocks that have hit 20% circuit from small cap or sort of nano cap category, they're huge in number. And this is one stock that has really gone very, very fast from the recent bottom. On a monthly basis, you can see that it is now at a 6-year range top, and once broken, this can significantly move up. But one should be, looking at some consolidation at this point, and then the stock moving up out of this range. Gold is flat, absolutely flat. There is no movement on gold. It had moved up to 73,000, but then it was pushed back again to 71,700. So we are still waiting for more cues on this. So front running is the news of the day. It was at least in the morning. The reason for the gap down, if one may look for a reason, was that people were afraid that there may be a huge selling from this particular AMC, where SEBI has raided the AMC on suspects of them doing some front running. In fact, it was not somebody who has made a complaint about this AMC, but SEBI, in its regular course of monitoring and inspection, has found that there has been some front running. So, from that perspective, there does seem to be, some reality and some truth to this matter. But of course, we will come to know once the story is completely unfolded. So these were the media reports that SEBI suspects front running in quant mutual fund. Quant mutual fund is that mutual fund which has grown from you know nothing to 90,000 crores of AUM in the last 5 years. So I don't think I've ever seen a more explosive growth than this ever. You can see here the 100 was 100 crores in 2019 and 90,000 crores very recently. So extremely powerful performance this fund has had, and it is the third largest small cap fund with assets more than 21,000 crores in that particular quant small cap fund. And uh, some of these stocks are the main holdings of the quant. People were extremely fearful this morning that there'll be a sell off in these stocks and all that, and but nothing of that kind happened, at least today. And if you actually go back and see what is front running, then there have been plentiful cases of front running, not only in India but overseas as well. I'll go through some of these cases, but mainly front running is essentially whenever a mutual fund or any kind of fund is buying or selling for on behalf of their clients. Before that bulk transaction happens, if people inside the organization or associated with the organization try to take positions ahead of that bulk move. So let's say the mutual fund has to buy 10 lakh shares of company X. Obviously, when they will go to the market to buy 10 lakh shares of company X, there will be some price movement that may happen on the upper side, right? When there's a huge volume to be bought. So these insiders or these related parties, they take position ahead of the fund actually going to the market. So if they know that tomorrow the fund has to buy 10 lakh shares of company A, then the previous day itself they will buy some small or whatever is their personal capacity to buy something, or if it is a large sort of nexus of operators who know that a large buying is coming tomorrow morning, they will take positions previous session or on that same morning, and once the fund is buying, they will offload to the fund or to the market. So in this way they make unlawful gains because this information should not have been privy to anybody else. That is number one. And number two, the unit holders of the fund get shortchanged to the extent that they probably uh, could have had better pricing if the stock was not, boosted up before the fund bought it. So from all angles, this is extremely wrong. And this has been a, you can say, ill of the market ever since market has existed. The greed of operators and related parties has never been satisfied. So some of these cases are Reliance Petroleum case, very famous case of 2007-8. Reliance Industries used 12 entities to sell shares before their own planned sale. So this was a huge case, and they were found guilty in that. Then India Infoline case happened in 14, where SEBI fined IIFL for placing orders ahead of client orders in the derivatives market. Then there was a Pune broker case in 2019, where SEBI banned a broker for using large client orders, that knowledge, to execute trades for personal gain. Then HDFC Mutual Fund case in 2020, a AMC employee was barred for using impending large orders to trade stocks for personal gains. Axis Mutual Fund case in 2022, fund managers at Axis Mutual Fund were using non-public information to trade for public benefit cases. And also TV anchor related cases, CNBC Awaz case in 2019, a anchor was fined for using privileged information about stock recommendations. Z business case 2020, again another anchor was trying to profit from anticipated market moves before the stock trips were given to the on television. So this kind of a market nuisance has been always been there on a global basis. If you recall, there was the Raj Ratnam case where the hedge fund manager was sent to 11 years of prison or something like that. So huge penalties and imprisonment has been given for cases abroad. But in India, I have not heard of any major penalties or any criminal prosecution being done. And I wish that the regulator and the legal system of our country will push towards making examples of these cases, because this is actually uh, you know it is continuing. I mean, just like the examples I've shown you, it has been continuing. I mean, there's no stopping to this. I mean, it happens. Probably these are the only cases that were caught, and the ones that were never caught would have been in hundreds and thousands of that. So this greed that I can make a quick buck ahead of the fund house trade. This needs to stop by exemplary punishment. And unfortunately, that is not the case today. But also in the present case, I think, should you be worried? I would think not. I would allow another couple of days to pass by as a worst case scenario. I think because these institutions are large, 90,000 crores AUM cannot be handled by a few people. There will be a very large team, and maybe there is some black sheep in the entire team which is doing this. It does not really mean that the AMC is involved as a in cahoots with that person. Or the other thing is that most investors in this fund have done really well. So it is not that investors have not done well and somebody else has done well. So that would have been even a different case. But here the investors have got the best kind of returns in the market from this fund, and that is why this fund has gone from 100 to 90,000 crores. And heads off to their promoters for working out such results. But this should have been a part of their due diligence within their company, that nothing of this sort should happen, and this will definitely impact the reputation and the confidence of the investor in the fund, and that probably can be rebuilt over some time by appropriate measures. But as of today, as a personal opinion, I don't see this to be a very any big deal. You should not be rushing to encash your portfolios. Some people will do that today, and you will have some selling tomorrow, possibly, but that should be the end of for now. And I hope that the fund company, the AMC, will make amends for all of this too in the near future. So that's all I have for today's Daily Bite. Thank you so much for watching. Please like and share these videos, and do subscribe to the channel. Thanks. Bye.